All right. Good morning, everybody. Welcome to the official Trade Talk channel. We're going to be looking at Bitcoin this morning, looking for bullish entries. I will not like it if we start trading and closing candles above this red area here on the DXY. Simply because you can see there are very many levels here that could be the target area for the position to make entry. So if you want to try to get long somewhere in here and then have wide risk, that is completely up to you. Just remember, inside of that risk, you're looking for roughly about 2% total loss on the portfolio. A big breakout above that red zone down there on the DXY is definitely going to have me not so happy about the buy. We have initial jobless claims coming in at 8:30, hence the reason why we're live so early. So in 20 minutes, 24 minutes, we'll have the jobless claims. Essentially what we're looking for is we're looking for a number higher than 195K. So 200, 250, something like that could make the dollar bearish and then hence get Bitcoin its pizzazz needed in order to come down here, take out this swing low, and then bounce. All right. And that's where we kind of stand for today. Euro looks good for the setup as well. This is fresh daily lows. And looking at all the indices, S&P 500, NASDAQ, Dow Jones, they all look okay for now. They're all red on the day. You got S&P down 0.50, US 30 0.20, and the US 100 0.80. So all of them down less than 1% on the day, but off the lows. Trading well off the lows. Let me fix this. Oh, here. And there's your US 100. There's your SPX. There's your NASDAQ. Your Dow Jones. All three of those trading up off the lows. Dollar on the highs. Bitcoin on the lows. And making or trying to make fresh daily lows as we speak. Euro trading on the lows. Euro has already gotten news that should have been bullish for it. CPI. This should be, there you go, March 2nd. That's today. 8.6 was the previous month. 8.2 is what the forecast was. 8.5. So still lower than last month, but higher than forecasted. A higher than expected should be taken as positive or bullish for the euro, and it's been a sell-off ever since. So the way that I'm reading the market today is it does appear as if though they are setting it up or a bearish run on the dollar, but they might want to close that gap up. Might want to stitch up that gap. I know there's a lot of stuff going on here, and it makes it difficult to read. But basically what you have is you have daily resistance, weekly resistance, both of them coming in line really close to one another. There's your daily res. Shit. That was the high of day. I guess we can get rid of it because you got a new high of day, obviously. And then the weekly resistance over here, which currently would be acting as support. So that's the problem with taking entries now, is if the dollar stretches up there, that could push Bitcoin well under this swing low from yesterday. There's another level right below there where it could potentially find support. And then again, it doesn't have to find support. The further we trade away from the point of control, you can see that people were taking positions here as support, probably expecting a bullish push as well. So, I mean, the further we get away from that, runs the risk of the market running completely away from us to the downside, triggering tons and tons of stops. But we know that there's, the sentiment in the market's not good right now, obviously. But with the news that we've gotten the last couple days, we really should have seen equities as well as Bitcoin get a bounce. So we did just liquidate that swing low on Bitget's exchange, but you didn't quite get there on Coinbase. So wait, here comes another run. And we haven't had the news yet. So keep that in mind. All this is taking place before the newsprint. Well, you absolutely see a lot more volatility to the downside. But ultimately, I do like the market higher if this number comes in higher. So if the number comes in lower, and then once again, just because the market is supposed to do something, it does not mean it will, guys. In fact, a lot of times it'll do the exact opposite and then do what it's supposed to do the next day. You have the news, we have what the news is supposed to do, and then there is the news's reaction or the market's reaction to the news. So the news sucks, and trying to trade the news sucks. But what we're trying to do here is trade a technical setup. That setup being Euro has had 2 bullish days, nice move up yesterday. We're looking at today. You've already gotten news that should be bullish the Euro with this higher than expected inflation number. Here we go. Bitcoin pushing well below the level. So go ahead and take that down here with a very wide stop. Very wide stop. So the technical setup is just right there. And that should eliminate anybody that was just targeting this swing low. You can see it's already bouncing back up. Here's Bitcoin on the 5 minutes. That is this little area right there. Daily support still down there, still hanging strong on Bitcoin. And then look at your dollar structure, look at your euro structure. Equities not getting a bullish pop. Equities still looking rather the same. So we are expecting the euro to pull back or to start find support pretty damn soon. We got an old area of resistance here. You could drop as low as that. And this is all happening before the news. I'm already up on the account 12%. So if you want to take some profits, it's advisable. Remember, there is a gap there from that swing high to where it opened. So we want to see gap fillage in the village, and then we want to see this thing leave, roll over, and die. That's the preferred reaction. Do like this, but once again, we're 15 minutes from the news, so this could ultimately be a seller's event. Up on the account 20%. I am taking profits now. What I would love to see is I would love to see this thing get back above resistance, obviously. I would also love to see this hurry up and do its thing and then start to get that bearish reaction. That's probably not going to happen until the news. So, very volatile day, but I have already taken profits. Hopefully, you have done the same. Good morning. Good morning. Why does your voice sound a little bit more matured but similar to Crypto Face? Is it me or you, his older brother? As far as I'm aware, I only have one brother and he does not trade. He definitely doesn't have a YouTube channel. I'm a smoker, so I got that smoker voice. And apparently, I'm always drunk, according to people in the chat. All right, so yeah, it looks good. I mean, that's the setup we've been looking for all morning. The fact that it came in and we got up before the news is okay. I mean, that was the targeted region, right? This was the initial area, but the fact that that gap is up there so high, it had me looking for lower stuff. I didn't think that yesterday's low would come into play. Yesterday's low is all the way down here. So my tweet, it was completely wrong when I said looking for yesterday's low. I was at the time when I made the tweet, I hadn't pulled it out yet and seen that this was not yesterday's low. It's just a swing low. So yeah, we want to see that number come in hot, dollar spike up, fill the gap, roll over. And then that could give us, if that occurs, that could give us a beautiful trade, seeing how that we're positioned down here. This is not an advisable strategy to do any other time. The only reason that we even attempt it today is because of the high risk news event. If you try to do this any other time, you will usually get ran over, as the market is showing you clear signs of bearish pressure. Now, that is on the euro only, on Bitcoin only. You are not seeing bearish, well, you are seeing bearish pressure on the equities, but they are not as volatile. They are not whipsawing around like this. So that's something. This looks clearly like a bullish breakout to the upside on the day. So you typically aren't really wanting to look to sell into that. What we're assuming is that the marketplace is already pricing in a pullback for continued euro strength, and you could see Bitcoin trading as high as 24K if that news comes in bad or up higher. But the fact that you've already liquidated the low and now are pushing up, into resistance levels, because each one of these are potential resistances. Boom, boom, boom. So you do have sellers that are going to be looking to sell into this. And there is meat on the bone. What I mean by that is there is room to the downside. Bitcoin is up off the lows 40%. And you have been trending lower. All right. You have been trending lower. Got a little bit of Pepe drama happening in the living room. He's being a brat the last couple of days. So point of control is going to be an area of interest for short sellers, especially since they're looking at this as well. I mean, that's as bullish of an engulfing as you can get. You took out the low yesterday, or this ain't yesterday, but last session, and closed well above the high. And that bullish continuation is what you would be looking for off of a move like that normally. And you could potentially today. That's why I said take profits. If you got in long down there, you definitely want to take profits on this spike, because when the news comes out, it could roll over. That way you made money today and then everything worked out. If we get a higher push, then obviously that's just icing on the cake. Equity's still not very volatile. I have them on the 5-minute here. You can see that they are pulling back a little bit, but they look nothing like, Bitcoin. or the euro, right? Euro's clearly had an impulse leg to the downside off of what should have been bullish news for the euro. Just like higher inflation or higher CPI was bullish for the dollar, higher CPI should be bullish for the euro. So that's what we're banking on, anyways, for today. It's already a good trade. I mean, original entry, 24.54%. That is the ROE on the P&L currently. So already, I mean, we've wiped out yesterday's trade and more. Yesterday's loss, it's gone off the books. See ya, wouldn't want to be ya. That's typically what we try to do, right? Lose small and then win small, but try to win more than you lose. I was actually going to try to do something else. Got 3 minutes on the news. For those of you that are wondering, Bitcoin's high of day is all the way up there. So that's where the high of day is. The high of day came in last night at the open. So when today's candle opened yesterday, because that's how Bitcoin works from 7 p.m. to 7 p.m. Eastern Standard Time, and during daylight savings it's 8 to 8, but from 7 to 7, so 7 p.m. yesterday, you opened a new daily and set the high of day, and then you've been selling off ever since. Not typically a bullish scenario, but that's also what we look for when we're trying to trade the trend, because ultimately what we see here going on is this: multiple days trying to close below support. 1, 2, 3, 4, 5 days there. You could not do it. You did break down here and close, but it was so close to it, right? So close. But it was, in fact, a breakdown. Then the next day you had a bullish engulfing, closed above this candle. So this candle's open and the close become points of interest for us to be buyers, with the anticipation that you're going to see bullish carry through or bullish continuation based off of this breakout above resistance. All right. Now, clearly, you're still down, but still, there's a lot of stuff going on here. Right here is weekly support. And the weekly support is also this week's open. So literally, you just need to get to here, which is roughly the midpoint. Euro breaking down. Here's the news. Dollar pushing up. That's okay. That's what we wanted to see. We want to see a gap fill. Then we want this thing to roll over. Euro pushing down to that level. And deeper, there is the gap fill there. Bitcoin coming back down. Now we want to see this thing roll over. Now we want to see this thing scoot to the upside. Let's go get the number. Well, it's lower. So that's actually bullish for the dollar. Damn it. So let's see how the market takes it. Remember, you still had the bullish Euro news. So let's see what it wants to do. You've closed the gap. At this point, you've done stopped almost everybody in the world out. Looks like it wants that bullish follow through. And that is why we take profits. Nice, nice, nice. That is why we take profits. I mean, Bitcoin still hasn't came down to my entry yet, but it's getting close. But that is why we take profits. We never know what's going to happen. It's impossible to know what is going to happen. All right, so we filled the gap. If I pull this up on a daily, you'll see here. You've taken out yesterday's high. So, or you're reaching for yesterday's high. Still haven't been stopped out on the Bitcoin trade. Entry is there. The white line. Even though the dollar's trading at yesterday's open, it's even if you take out yesterday's low, you are not an engulfing. You did not take out, yesterday's high. Shit. That's yesterday's high. You did not take out yesterday's low. So not an engulfing. So maybe the dollar takes out yesterday's high and rolls over. But nonetheless, we want the dollar to roll over. What is equities doing? Equities pushing down, but not to the lows. Bitcoin rocking and rolling. Back up. So if you didn't take profits on the original move, take them now. Take them now. You're still unable to get above this point of control here. A lot of selling pressure right in this area. Dollar, get up there, take out yesterday's high, and then roll over, please. That is a nasty looking 5-minute candle. All right, there it is. You officially got it. So now we want to see it go bye-bye. These things pushing down now. Now they're getting down there. Well, we still got a long day of trading to go. The open hasn't even happened yet. And you got all this stuff happening. That's high. That should, if my thesis is correct, that should be the high on the dollar for the day. Or somewhere in that vicinity. And we should see bullish continuation. We're still trading as an inside day on Bitcoin. These boxes, that's your daily range, each one. It's your full day's range. So you can see currently today's high is well under yesterday's high. Today's low well above yesterday's low. Makes you an inside day. We want to see bullish continuation to the upside. And then that would be your pullback, retest of support, and expansion. If you're a wave counter, I am not. I just trade the candles. And I try to position myself with order flow. This doesn't scare me at all. What would scare me is if we start to see it ripping above this and like making fresh 5-minute high after 5-minute high. Then you're likely going to see Bitcoin roll over ultimately and push down and knock out any of those stops. So the NASDAQ this is your low of day on the NASDAQ. So I hope you wasn't trading the NASDAQ as an inverse head and shoulders, as those typically do not work. Right? These are targets. These swings down here are targets. You got to start looking at it like that. Well, I don't know if we're gonna make it to the open or not because we've already done our job. Our job was to make money today because we lost money yesterday. So there's probably no point in going into the open on the stream, but we'll see. We'll see how everything plays out. But I would love to see Bitcoin close this hour out strong. I would love to see the euro finally get some kind of bullish reaction. Remember, the euro looks like this on the daily. Swing low, higher close, pull back, higher high, pull back, midpoint, bullish candle, then bullish expansion. This is a very deep correction, deeper than we anticipated, deeper than we wanted, but nonetheless, as long as you're not closing today under 105,741, could still be a buying opportunity. You broke down, though, from the yearly opening range. This yellow line is the yearly opening range. Why is it so far away? Let me just make sure. There you go. So naturally, any pullback into that area is going to be met with heavy selling. And the reason is simple, because price action analysts will see that you made your yearly here, traded down, set your yearly low, traded up, set your yearly high, and now you're trading back down towards the end of the range. So from here to here is your current year candle. I didn't want to get rid of that line, but whatever. Put its ass right back. That is not where it goes. All right. So here's your year 2023 low, 2020 or 23's high. And this is your open. So you're currently on the year bearish. Currently on the year or on the quarter bearish with a wick up. Red candle body. Red candle body. You have a wick to the downside, a wick to the upside, and you're trading in the middle, kind of sort of the open to the low. I mean, we want it to be above 107 and trading away from it, as that brings this into perspective. So as far as making a trending move, if it fails to get above this, then we know we are going to be looking for shorts, looking for downside continuation. After, even though you had such a strong January, a good December and November. I mean, this thing broke out above parity and took off. But the whole year coming into 2022 is the bearish for the whole year. It just opened, dropped, and left. See ya. And you could get the same exact thing in 2023 if inflation becomes entrenched for the Eurozone, which it is appearing to do. So now they're looking for a 50 basis point rate hike on the euro. That ultimately should be bullish for the euro. But we are not getting that current play right now. Good afternoon, Heath and gang. Good afternoon, Michelle. Andy Lou, why does your read that? Good morning, good mornings, good mornings. Wolford, I can't even say that. Wolford Disworthy, England. Some strange names over there across the pond. Were towns. Higher EU inflation leading to weak euro. This happened before. It is and is against what is supposed to happen. Yeah, I know. There's a lot of things that's been happening before and is against what should be happening. There's investors that have been hedge fund managers for 30 years have never seen stuff that's going on right now. Right? People that have been doing this their whole life are as confused as we are. So it's not like I'm afraid or anything like that. It's just under these conditions, it makes trading intraday very difficult because what typically should be happening isn't, right? So that's why I say if you're going to attempt to take these trades with me, that you know what you're risking. How much are you risking? And do not risk more than you can afford to lose, because I am not, you know what I mean? It's not my money, it's yours. I got my money under control. You know what I'm risking. You need to understand what you're risking. I'm just trying to teach you the process. of looking for objective areas of price and how to build a bias. That's what I'm teaching you. Sometimes your bias is going to be wrong because the market's going to do opposite of what it should be doing because nobody knows what price is going to do ever. As far as the dollar is concerned, it doesn't need to go any higher than what it just did for liquidation purposes. That's all I'm going to say about that. For liquidation purposes, it has liquidated everything. There is no reason for it to trade any higher. If it does, then that implies something else. It implies that it's looking to set a fresh 2023 high, and there is legit capital rotation happening, meaning people are reinvesting in the dollar. All of the longs that took profits over here that caused this lower move, this rapid move to the downside, are now reallocating funds back to it. That's what we have to figure out. Is that what is going on? Or is this now going to be the dominant trend for 2023? And this is just a pullback? Or is it going to be a range bound market for all of 2023? It could absolutely do that. Absolutely. So if that's your yearly candle currently on the dollar, you could absolutely see something like that play out, right? For the entire year. It's going to be difficult to trade that. When you're in a trending environment, it's simple. You position yourself at the lows if you're looking for longs and the market is trending higher. And then you just sit back and watch as the money comes in. Range bound markets is where the pros get separated from the non-pros. The problem is how high do we got to get off the yearly open before my bias changes? Well, I'll let you know. Right, my bias hasn't changed yet. I think the market is probably going. I think the dollar is probably going to be, um, like if we close today out strong, then obviously my upside bullish target's going to be 105.63. And the way that we will have to approach the market is the simple fact that they have lost all hope of seeing any kind of rate cuts for 2023. We, on this channel, we never said that we were expecting a Fed pivot or anything, because what we do here is we trade price. We trade what the chart is telling us. That's it, nothing more. We try not to carry a bias about what the Fed is going to do. But the Fed has said already that they're not hinting at all about changing their policy. Their policy has been steadfast and the same since November 2022. We are going to raise interest rates. We have a 5% target. They're looking for 2% inflation. They're going to keep raising interest rates until they get that. So that could be ultimately what's driving yields. Ultimately, that could drive dollar strength. So the dollar short position that's up here at this white line, because that is where the dollar short position is, will be managed. I will take more profits off of it and I will move my stop loss lower. And then I will look to offset that or hedge that risk by looking for short euro positions or short pound positions or short Aussie positions. That's how you hedge. Because, like I said, I don't know what the market's going to do. Right? There you go. There's your yearly opening range. So you've broken down on the Aussie as well. Aussie is typically looked at as like a risk on currency, right? When the S&P 500 and everything is nice and bullish, people tend to get long Aussie. When you're in a bear market, Aussie is one of the favorites to look for short positions. So if the downtrend overall is going to continue, then we will be looking to sell resistances. You can go ahead and start doing that if you want to. I have no problem with that. That's going to be bad for the Bitcoin bull narrative, but narratives in trading do not work. You should not have a narrative. You should be looking to trade the charts, my friends. You should be allowing price to tell you what to do. Here we come back down to the entry positions, and you are getting continuation to the upside on the dollar. All of this before the market opens. So, for anybody just joining us, what we did this morning is we took a long position as Bitcoin pushed down into this area here. Took a long position, and then as it started to make its ascension, we took profits. So now, as it comes back down to our entries, we can close out those trades or just push the stop up to the entry. That way, if you do indeed get stopped out, your P&L has already grown. You have managed risk successfully, even though you were on the wrong side of the trade. We don't quite know yet, but it is beginning to look like longs is not where we should be positioned. So that entire bullish day here was nothing more than a trap to pull in dollar or bullish liquidity. This is a trend. You are starting to trend. Equities are starting to trend lower. Dow's still doing okay, but ultimately still making lower highs. NASDAQ is on the lows of day. S&P 500 getting closer to the lows of day. Aussie on the lows of day. Euro on the lows of day. Euro still has the support right there, though. That could hold at the open. Right? I'm good, baby. Well, hi. Oh, read that. Good morning. Can you, shit. The chat just dropped, just did its little thing where it screws me up. Right there's where I was. Yep, I take profits. Good job. Stop smoking. Yeah, I'm working on it. I I am. I am. I need to so bad as my health depends upon it. Read a very good article on why the U.S. would like to have strong dollar and an economic war versus China. I might look for that article. I love your analysis so much. If there's anything I love more than your analysis, is your voice. Always sound to me like those Wild West gunslingers. Thank you, my friend. I appreciate that. After the bullish engulfing yesterday on Bitcoin, why were you not looking to buy daily demand today? Simply because we had two news events that, yeah, we've had a lot of data prints coming out, and since clearly the Fed is data dependent right now, and the data is going to be driving their decision making process, it's going to make technical analysis a lot less efficient, if you will, right? So, like, if we were under normal trending conditions, then you would be looking to buy daily demand. That was an area that we had marked out on the chart. And for any of you that are not pervy as to what he is asking, let me show you. Okay. So this is daily demand. There. Let's get rid of everything else as to not confuse. So, since the bullish engulfing yesterday, why was I not looking for setups up here? That's what he's asked, or they. That's what they are asking. Okay, I come to the desk at 6 o'clock in the morning. That's what time I start trading. 6 a.m. Sometimes later, depending on how I feel, right? And you can see here at 6 o'clock in the morning, we were already trading well under that level. So that right there told me that more than likely that level is not going to be an area to be a buyer for sure. I can clearly see the order flow is bearish on the day, but I also don't want to look for shorts down here either at the bottom edge of the range, because as of this point in time, that's all the data that I have to work with. Let me do this again. So, like, this is what I'm looking at when I get to the desk. This is what I see. This is the data that I have. So now I must make my trading decisions off of that. I can clearly see yesterday was bullish engulfing, and I know that this is daily demand. But not only are we trading under daily demand, it did not act as support. It did for a few hours, but ultimately you broke down. And then if you look at the structure of the market, your bullish candles are not making higher closes than previous bullish candles in the daily range. This is the daily open here. So you opened above it. You did get a chance to buy it there. And by this point in time, if you didn't get stopped out on that candle, you would be happy thinking that, yay, it's going to work. But then your dreams and hopes were shattered right there. Boom. So this was the data that I had. This tells me already that the daily bias is short. So typically what I'm looking for at that point would be resistance. That 23,490 area could act as resistance. Or I can watch hourly resistance for short setups. If I play one more candle over, boom, there it is, 7 o'clock. So now, you see what I'm saying? Like, now I have to tell myself, well, we just took out the low of day, so I can't look for new shorts. It's the low of day. Right? I can't short the low. I just can't do it. But a pullback into this area could have me looking for shorts. Because that's resistance. 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 I mean, the day is trending lower. Here's your daily open. You push that high of day, instantly you make a low of day, new low of day. Then you close lower. This is your first bullish attempt on the daily range. You go up, you stop, very next hourly, boom, lower close than your previous bearish closes. That is a trending condition. Next bullish candle, did we take out the high and close above this candle? No, you did not. So you're making lower bullish closes at the same time making lower bearish closes. So your bias instantly needs to be bearish on the day. This can change, always. It can always change during high-driven risk events. I look at the calendar, see if we have any. Oh crap, we got two big ones. CPI already happened. And if you click on that, it tells you right here, a higher than expected reading should be taken as positive / bullish for the euro, while a lower than expected reading should be taken as negative or bearish for the euro. You had a higher than expected number. 8.2 is lower than 8.5. So you had a higher than expected number. A higher than expected reading should be taken as positive. So that means typically you would be thinking the euro is trading higher. But then I look and the euro's red on the damn day. Why? I don't know. It should be bullish, right? But it's not. So what we then see is we have another economic thing coming up that directly affects the dollar at 8:30. So basically, if 196K, anything higher than 195 would have been another bullish signal for the euro or bearish for the dollar. So you had two data points right there that suggest weaker dollar. So that's the only reason why we were looking for buys on Bitcoin today. That's it. With the caveat that obviously the trend of the day is bearish. Also, at the same point in time, the point of control is near the lows. Now, we don't take trades off of the point of control. It's just an indicator. Okay? We don't take entries based off of indicators. We take entries based off technical levels. But we use indicators to help us with our bias. This suggests that there's a lot of stuff going on here. There's a lot of buying and selling happening at the lows. That's typically a bullish signal, right? Higher point of control is high up on the day. What did you get? You got a bearish breakdown. When your point of control is down near the lows of the day, you expect the opposite. But it doesn't always work like that. Because if you're going to continue to have a breakdown trending lower day, then your point of control is going to be roughly in the middle of the day. Like there. That's not a very good example. Here, for instance. See how the point of control is in the middle of the day? Well, that's typically what you're going to end up with today, unless at 9:30 the buyers show up. That is the only bullish signal that we had. So the way that my trading style works is I'm looking to scalp intraday range expansions or intraday moves because I don't know which way it's going to go. I look for the highest probable area to take entries, and then I manage my risk instantly or as quickly as possible, which simply means that if I get the expansion in the direction of my entry, then I take profits as it goes that way, just in case I'm wrong on market direction. Because I can't know what market is, which way it's going to go. So that's scalping the range, and you don't even need to know which way the market's going to go. And occasionally you're going to get lucky, right? Occasionally you're going to buy the low of day or sell the high of day. Occasionally. It doesn't happen often. But occasionally it does happen. Right? This is what we got so far. You're making another push lower. So this would have been a decent area to look for sell side entries. That's why I said when we pushed up here, this was where we took our entry, right? When we pushed up here, I said to take profits because right in here is where you're going to see a lot of selling take place. It's going to be people like me that are taking profits off that initial scalp. Also, new people are going to be looking to enter bearish positions based on the fact that the daily trend is lower. So, if you were looking for shorts, that would have been a high probable area to look for those shorts. The only problem is you're looking for the shorts and you can't expect a trending day. I can't short it here because here's the low of day. Up here's the high of day. So to me, this still looks like the risk is still to the upside no matter what the market's doing. Now, you got a long day ahead of you still. The market isn't even open yet in New York, right? And this has already happened. All of this has already happened and you haven't even gotten the open yet. Excuse me. My job as a trader isn't to know which direction the market is going. Okay? Your job, if you decide to become a risk manager, is to manage your risk. That is your job. You've got algorithms and bots that are taking and exiting positions based on certain criteria. That's why you see random spikes and then like just crazy nonsense. It's impossible to know which way it's going to go. I never take a position and expect it to be right. I look for high probable areas during high probable times. I know the market is going to have a thrust or a bigger move from 7 to 10 because that's when the last bit of volume for the daily session comes in. The last bit of volume. That's it. So that's why I stopped looking for entries after that. Occasionally you'll have a Fed speaker that'll say something at 2 or 3 o'clock in the day that'll cause market volatility. But generally speaking, I like trading under controlled days. Like the controlled days are when there is no high news event, because then we can just typically look for whichever direction the market has been trending. We can look for continuation in that direction and just look for a high probable area to take the trade. If we get stopped out, then we're done for the day. We wait for the next day. It's all about being consistent. You have to be consistent. If you are not consistent, you will never reach profitability. So with my strategy, I simply designed it so that way I could take these quick moves, strong moves, make 20%. You know what I mean? That's a big 20% on an entry is good. Not so much for crypto because of the fees and everything that are associated with the exchanges. But if you're using low leverage and you make 20%, you're going to have a nice P&L. That's going to be a huge bump to the P&L. Then you move your risk. That way, if you do get bullish continuation, then you will be positioned pretty damn close to the low of day. But if you're wrong and the market ultimately rolls over, comes and stops us out like it did here, you still made money on the trade. And that is the crucial part. of the strategy. That I don't know which way price is going, but I can damn sure operate inside of the daily range to get in and get out with a small piece of money. And that's it. Risk small, win small, and do that consistently. Not 1,000 times a day either, because then the more you trade, the more chances you're putting yourself into the marketplace, you're going to lose money, right? So you just look for that one good move, and you've got all day to do it, all day long. Then we're coming up on the open again. We made money. Why would we try to risk that on taking a new position? The money that we just made. Why even risk it? Because you think the market's going to do something. What do you think the market's going to do? Does it even matter what you think the market is going to do? No, it doesn't. Your bias, your opinion on market direction is irrelevant. It is a coin flip. You just have to understand probabilities and risk. Once you do that, once you stop with the gambling mentality, once you stop with the overtrading, once you stop chasing price, once you stop trying to figure out which way the market's going to go today, that's when you're really going to start to see how trading actually works. That's when you're going to be able to actually put together a strategy so that way you can get in, get out with a few pips. That's it. That's all you're trying to do. And you're trying to do that once or twice a week. If you can do that once or twice a week, if you can manage to make 2%, 2% per week on your portfolio, dude, that literally doubles your account 3 times in a year by making 2% per week. If my math is correct. No, sorry. 1% per day. So that would be 5% per week. You would double your account 3 times in 1 year. But do you understand how hard it is to consistently make 2% per week? It's freaking difficult, given that 90% of retail is risking 50% on every trade. No wonder you've lost your entire money, all of it. You don't understand risk to reward. You're trying to turn $100 into $1 million. It isn't going to work. Can one person out of 50 billion do it? Yeah, of course. Well, I think there's only 7 billion people on the planet, but you get my point, right? Is there one person out there who might get lucky and take $100 worth of Shiba Inu, buy it, and then make 14 million? Yeah. Yeah. It's possible. Is it going to happen to you? What do the odds say? No, it's not. You're playing the lottery. You should just buy scratch off tickets. You would actually have a better chance of making money than buying some random shitcoin and getting rich. You need a rules-based strategy that you can deploy that takes all emotions out of it. I am not trying to determine market direction. I am simply looking for an area to where I might be able to make some money. And by back testing and looking at chart data, I have done that. I have built a strategy that is so simple that if people would just follow the simple rules and manage their risk, they could change their lives. And it's a fact. I have people right now that are doing it, literally. So simple. They are not trying. They are not. It's impossible. Like the biggest YouTube and trader out there, all of them. You go find a video where they tell you how to find daily bias, how to determine a daily bias, how to know which way the market is going to go for that day. And then when you find a video that tells you how and is better than 50% accurate, you let me know. I would love to watch it. You won't find it. The reason is because no matter what indicators you use, no matter what technical analysis you deploy, you will not know the daily bias before it plays out. It's impossible. You're trying to look into the future. You should be focusing on looking for high probable areas to deploy risk. And if you get stopped out, well, then you know you were wrong. And that is okay because tomorrow will bring another opportunity. Every day that you're alive, there is an opportunity to make money in the market. There are traders that make a very consistent living just by selling option spreads. They are delta neutral. They are directional neutral. They do not care which way the market goes, right? I don't care if it goes up. I don't care if it goes down. All I care is, does it stay away from this price and does it stay away from that price? If as long as that occurs, and there's a 90% chance that that will happen, then I'll make a couple $100. The problem with those strategies is they're risking a couple $1,000, right? That's the problem with it. The risk to reward is skewed on selling delta neutral strategies. But, if you want to go that route, there is people out there that will teach you for a fee how to do that. I'm not going to do it because there still is no guarantee that I can provide to you that means you will be profitable. Because like I said, it's just because it's got a 90% hit rate, that does not mean you will be profitable. Because if you take 6 good trades, you know what I mean, and you hit them, boom, 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 and then on that 7th trade you lose, well, that one loss wipes out not only the first 6 you won, but also half of your account because you were not positioned correctly. You did not have your risk managed correctly. Trading is not easy, ladies and gentlemen. And you definitely got, you guys just, you'll figure it out. I mean, you will. You'll figure it out. You'll keep going to YouTuber after YouTuber expecting that this guy knows what he's talking about because he's calling market bottoms and market tops and this and that. You're going to find out that you, for some reason, even though you're doing the same things he's doing, you're still just not able to consistently pull out chunks of money. There's a reason for that. Either A, he's teaching you something that isn't true, or B, you're not managing your risk correctly. That trade right there proves that you can be wrong on market direction and still make money. We just did it live. That is why I do 2 live streams for the public every week. That way you can watch me lose money and make money, right? That way you know that it's recorded. It's out there for the whole world to see forever. I am not hiding anything. There is no picking direction correctly. And if I do, it's pure luck. But where I position myself is not luck. That's where the skill is. Knowing what time to trade and where to trade. That's where the skill is. Therein lies the edge. Therein lies the edge. The problem also with the edge, though, because, it's a good edge, but there still is problems with it, obviously, is when you're trading choppy and sideways like this, it makes it difficult to make money. It makes it difficult to win. Because the market is chopping back and forth. It isn't trending. So when I bought down here, do you think that I knew the low of do you think that I still know that this is going to be the low on Bitcoin? I think it is, right? I bought it. I bought the low tick based on my strategy. Did the exact same thing that we just did right here. Exact same thing. We waited for that low to be liquidated, then we got long. Did we know that the trade was going to end up work out like that? No. Absolutely not. I had no clue. But since it did, and since I'm levered up, that trade made a lot of money. Do you realize that the money that this one trade made, I literally don't need to trade at all for the rest of the year? And I've already done my year. My year is complete. Couple that with the USD JPY short, those two trades, boom, boom. Done. Year is complete. Over with. These intraday scalps, they can position you in good places, but you're never going to know if it's going to go in the right direction or not. That was a massive rant. We got 1 minute till the market opens. Let's see if daily support gets tested and holds. It's, pretty much a crapshoot at this point, but it could still hold. That could hold. Price could bounce from here. What are we looking at on the dollar? Yeah, the dollar has ultimately rolled over. So this could have just been one last run lower. There is support on the euro. Will it hold? I don't know. But you can try it, right? You can try to take a position here. something like, I want to buy the market right there. Boom. What is that price? 105,920. Buy. Risk on a 15 pip. Let's do 20 pips. 20 pips. We want to risk 1%. Take the limit. Or you could market in. Your choice. But by marketing in, you're going to get a nastier fill. Obviously. And there on Bitcoin, you can watch here. Do you get any lower closes? If not, on the next hour, if you come back in and test this price and bounce, or even now, you could potentially buy here and put your stop under there. And if today does end up becoming bullish, I don't know why it would, but if it does, all you need is for it to move there, and you will have a 2-to-1 risk to reward. But if you get stopped out, you got to eat that loss. And you don't try it again. 105, 9, deuce, deuce. So right there. That even gives you a little bit of room for an actual support test. What's risk look like? Here's the open, risk pushing lower. Still did not take out the lows of day. So I don't know if we'll even get a fill on that, but that's essentially how that's all we're doing, right? We know that this is daily support. So as long as we close today above this price, then we stand a good chance on earning a little bit of funds. If the trend continues to go lower, you will be stopped out. But based on the daily time frame, off of what happened yesterday, I mean, yeah, if the buyers are going to show up, they would probably do it there. You don't want to buy the top of the market. You look to trade inside the range. And we know that the market has the ability to trade from here to here because it did it yesterday. So now you expect the market to stay inside of that range. You're not expecting anything else. You're only expecting the market to stay inside this range and perhaps to close higher on the day, obviously. That's what you want it to do, anyways. That's what we think is going to happen, but I don't know it's going to happen. Based off of everything I said this morning, And also another thing is both the news items that we got were competing. They were competing or competitive. In other words, they butted heads with each other. So essentially they cancel out. They cancel each other out. Until you take out yesterday's low, the bullish engulfing is still in play on Bitcoin. Until you take out yesterday's low, which is there, this is still in play. You did not break any trends, or did you? Yeah, I guess one could argue that you did break that. But trend lines are so freaking subjective. Right? You could make the argument that you're coming in for a trend line test. You broke out yesterday. That's enough to bring buyers in because people trade off of that knowledge. And there's the trend line on the dollar. Right? There's your uptrend. There's your breakdown. So you've liquidated yesterday's high. If it's going to roll over, it should do it now. So essentially, you don't want to see it trading above that anymore. In fact, you want to see a rapid departure from that area, actually. So this could be the area that we're looking for the dollar to roll over. But like I said, if this is like a hot knife through butter, it could come all the way down and just trigger you and stop you all in one fair swoop. Fail swoop. One fail swoop. But the sellers are definitely in control of price as of right now. S&P 500 getting a beat up. US 30 taking a whooping. US 100 getting its head beat into. Everything's right on the day. Not quite a percent. You got the NASDAQ down 1% on the day. Two competing narratives. The news events cancel each other out. So, yeah. Don't want to see the dollar trending higher than that price, 105.42. If it does start to trend above that price, that euro trade will be stopped out. It's that simple. We can't control which way the market goes. The only thing that we can control is how much money we lose. Right? And that's what it's about. You want Tesla technical analysis? Absolutely. But yeah, TA doesn't really work in uncertain times as good as it generally would, or in a trending environment. In a trending environment, it works out beautiful sometimes. Tesla gapping way down after a week of consolidation. Remember, there is a gap down here as well. So we would expect that to be filled. Well, not expect it, but basically I've been telling you guys not to be a buyer on Tesla up here. Because if we have an overall changing in dynamics, if everybody has come to the conclusion, all the investors are now you're starting to hear more and more bears show back up, right? Now it's not as, with the latest data points that we've gotten, now you're starting to see that more and more people are starting to say, yeah, you're probably not going to see any rate cuts this year. Then all the capital that rotated into these riskier, higher beta stocks will rotate out and go into safer plays. So what are safer plays? And I will analyze this for you in a second. Just give me 1 minute here. Value. Value is typically where people will go, right? Value. Or something that yields positive gains. Right now, you can get what? 5%, 4.8%, 4% on the 30-year, 4%. The 2-year is almost at 5%, man. Like, that's positive alpha. It ain't much, but it's guaranteed money. That's why you're seeing it happen in front of your eyes, right? Because people are starting to come to that conclusion again. If that happens, we will have to change our bias. And Bitcoin will look attractive as a sell because it is up on the year still 40%. That's the highest. Sorry, that's not what I meant to do. You're reaching levels that you haven't seen on the 2-year since 2007. During the great financial crisis of '08. You're reaching the same level. Alpha there. There's money to be made there. Those guys control a lot of money. It's not a lot of money on a $100 bill. It's a lot of money on $1 billion, though. A guaranteed 5% for a year, just worth of holding. Naturally, they want more than 5% because, the more they make, the better they are. But it's good, safe money. And safe money is becoming more and more attractive every single day, unfortunately. And Tesla's got its own problems, right? Like, I don't know if you've seen the article yesterday about China, about some tweet he tweeted. Elon tweeted something that upset China, and Elon, being the richest man in the world, has a little bit of a cocky attitude already. But I mean, just technically, this is not an area to buy. We don't short into support and we don't buy into resistance. That is old support. It's a monthly support, 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 breakdown, continuation, retest. If anything, this was an area to look for shorts. So now you're going to have to wait to see if support comes back. There's a daily support level right there at 166.68. That could potentially act as support, so you can watch that price. If you close a daily under that price, then I would wait for the gap fill. The gap fill would be 146.41. If that doesn't hold as support, then buy the yearly open, 118.47. So there is your technical analysis for Tesla. Be a buyer here, here, or here. Once again, 166.66. If you lose that, 146.41. If you lose that, 118.47. Those are the only three places I would be a buyer on Tesla. So we're 15 minutes into the trading session, and the dollar is looking like it wants to run higher. What are we holding here? At an old daily demand level. The S&P 500 is trying to find support there. Will it hold? I mean, it's been a straight shot for the last 2 weeks to the downside. So probably not, right? 1, 2, 3, 4 red weeks in a row. Yeah, it's getting a bit extended, but it's still heading lower. It might be an area to look to risk a little bit of money on a bounce play. Only a bounce play. You're only looking for a bounce. You're not looking for a massive uptrend to continue. You're just looking for a bounce. Once that bounce has occurred, if the bounce occurs, you take profits and you move your stop to break even. That is protecting the position. That is how you protect your gains. Then you just let the unrealized P&L continue. Once it becomes a substantial amount of money, again, if it does become another substantial amount, then you can cut that in half, taking more profits. But yeah, Tesla looks rough. 2 trades in a year sounds so nice. It's the best. I mean, like, dude, that's generally how it happens, right? Generally how it happens. You just get lucky, you buy daily support one day, and it ends up holding, and then you catch yourself in a trend, and that trend just, yeah, grows the equity in the account. But you need a trending environment for that, and currently we do not have that. The US 30 is in a range. It has built a range. Almost all of these things have built a range. Remember, you're in a new year, so we don't care about what happened last year. We only care about what's happening now. And that's your US 30. There's your Dow Jones Industrial. You set a yearly high, and just a couple days ago, you set a fresh yearly low. So if anything, one could argue that you're starting to trend lower on the Dow. At some point, we want to see support hold. And then any retest back up into here will probably be sold into. High, impulse, retest, impulse. So if we are going to see a bear market, if the bear market is not over, I will be highly upset with myself. But at the same time, I will change my bias if need be. If need be. Did that trade already get stopped out? It shouldn't, no. Oh, I'm on the wrong one. Nice fill, if I don't say so myself. Right? It just came in there, barely filled my entry. That's the stuff that technical analysis can do for you, right? That. But I still don't know, right? I still don't know which way it's going to go. We'll see how it plays out for the rest of the day. I've done my job. And we already made money on Bitcoin, so that's good. Check mark, check mark, check marks across the board. Let's see if the dollar rolls over. But with that, we're going to wrap it up. I got to get some breakfast going here. Can I look at ZM? Zoom, man. That was the trade, wasn't it? Back in the days of the Wu flu. You're trading at levels that you ICO'd or IPO'd. The work from home trade is over with, obviously. But you are into monthly support. This is it's a tech play, so it's a higher risky play. If the bear market ends up becoming over soon, then this will be an attractive asset for entries. But as of right now, with everything going on, I would probably leave it alone. I won't be happy with my overall analysis as far as do I believe the short dollar trade is going to be the trade of 2023 until we get back under the yearly opening range. Unfortunately, the data that last NFP number we got, that was bad. That was bad, very bad. That changed a lot of people's opinions. That's when reality essentially sat in for most investors, that there will be no easing, right? Now, risk markets can still go up in a higher interest rate environment, guys. Keep that in mind. These funds, these hedge funds, they got to put the money somewhere. So some money will go into some of these more attractive assets. What we need to find out is, why did Zoom get hit so hard? Like, all of its gains it lost. Not some, all. It's probably based on earnings. They probably just aren't making money. Yeah, the assets that are down 90%, if you do put some of this in your portfolio, I wouldn't put much in it, right? Not much at all. Well, they've had really good earnings. I don't understand why they haven't missed on earnings ever. There is an overall reason, fundamental reason why this asset is off 90%. Find out what that reason is, and then ask yourself, could it change? If the answer is yes, then yeah, it's an attractive asset just because of how low it is. But can it go lower? Oh yeah. Oh yeah. I bought space at $10. What a mistake that was, right? We're trading at $4.88. I bought it at $4. I mean $10. Because I'm thinking to myself, well, hell, that's we're all the way back to IPO prices. Yeah, I'll buy some shares here. We're trading at 487. Same thing can happen to Zoom. Keep that in mind. You can trade at all-time lows on Zoom. So don't buy a lot of it. So I can afford some eggs. Yeah, eggs are roughly $9 for an 18 pack of eggs. That's insane. Getting charged the same amount of money for eggs as an 18 pack of beer. It's crazy. Or what an 18 pack of beer used to be. But yeah, we'll see. We'll see what happens with this. Obviously, with a bad economy and people looking for a recession, a dude that offers cruises to space probably not going to make a lot of money this year. I don't even know if they have a functionable rocket yet, or aircraft, right? I didn't buy it based on anything other than it's a speculation driven play. And I didn't buy it with every cent I have, so if they go bankrupt, I will be fine. It was a small amount. It wasn't even I don't even think it was enough. Like, I wouldn't even consider it a day trade. I bought it with a very small portion of the portfolio. So I'll eat that. Um, But when the markets chill out and risk becomes attractive again for investors, then I expect to make a little bit of money on that. When I bought it for a 5 to 10 year hold. A 5 to 10 year hold. So, you guys have a fantastic rest of your day. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.